Hello students, welcome to all of you Shiksha 360 Jaiib classes. Today basically we have to cover chapter number 41 of PPP. As all of you already know that basically whatever basically we are discussing here regularly MCQs basically will be provided in your group along with the notes. So that first of all you can go through the video, after that notes, and then practice the MCQs. Clear? If you do in this way, definitely you are able to clear the exam basically in first attempt basically with very good marks. So let's start our session chapter number 41, that is mutual funds. This is part 1. This topic basically we will cover in 3 parts. So first of all here basically we have to know that what is the meaning of mutual fund or what are mutual funds. So mutual funds basically here perform an important role or plays an important role of financial intermediary by mopping up savings from the investors and channelizing them towards a productive investments. Clear? So what is that basically? From the customers, they are taking their savings and they are putting their savings into the investments. Clear? So here what the mutual funds basically, mutual funds play their role as a financial intermediary. They also form a dependable avenue for those investors, like basically who are investing in the mutual funds, basically who are not very well aware regarding all these things. Clear? Like in which company basically we have to invest, in which company basically we don't have. Clear? So they also form a dependable avenue basically for those investors who want to invest in the capital market but keep away from it due to the lack of expertise. So very important question next, which they will ask in the examination. So who will supervise the mutual funds? So mutual funds basically are supervised by the SEBI. Clear? So mutual funds are supervised by the SEBI. Now move to the next one. Mutual funds and their functions. Basically from this slide, basically we are able to get 2 to 3 questions which we will discuss in the upcoming slides. So what are mutual funds? Basically mutual fund basically it is a mechanism for pooling resources basically from the public by issuing units. Like basically you are paying some amount, they will issue a unit like NAV and AV. Clear? Which you are able to understand in the upcoming slides. What is this? So mutual fund, it is a mechanism basically for pooling resources from the public by issuing units to them and investing the funds slow collected. Whatever they are taking the funds basically from the saving, they are investing these funds. Clear? Investing the funds so collected in securities in accordance basically with the objectives as disclosed in an offer document. Mutual fund issues units to the investors. Basically what they will do, basically they will issue units to the investors in accordance with the quantum of money invested by them. Clear? In accordance with the quantum, like how much money they are investing for different funds. Basically their price of the units, it is to be different. Clear? So investors of mutual funds are known to be as the unit holders. Clear? So next question which they will ask in the examination, basically who are to be known as the unit holders? Basically investors of the mutual funds. The persons basically who are investing, that persons are known as investors. Basically investors of the mutual funds are to be known as the unit holders. The profits or losses of the fund or plan are shared by the investors in proportion to their investments. Clear? Basically if they are getting profit, so they will get profit basically as per their investment. Clear? If they are getting moved towards the loss, so they will get the loss as per their investment. Clear? So the mutual fund, it is required to be registered with the SEBI. It is required to be registered and it is also supervised, which we have already know, that is it is also supervised by the SEBI, which regulates the securities market. Clear? Basically what they will do, basically which regulates the securities market before it can collect funds basically from the public. Clear? Which regulates the securities markets before it can collect funds basically from the public. SEBI basically what they will do, basically SEBI formulates the policies and regulates the mutual funds to protect the interest of the investors. Clear? So what the SEBI will do, basically SEBI formulates the policies and regulates the mutual funds to protect the interest of the investors. So how the total process basically it will go? So first of all, investors basically pool their money. So next one, that is fund manager, basically investor, that is unit holders. So basically fund manager basically invest pooled money in the securities. Clear? Whatever they have collected, they will put that in the securities. So income and dividends are to be generated. So income is to be distributed basically among the shareholders. Clear? So basically they will take their price in the form of the fees, and rest basically income it is to be distributed basically among all the shareholders. Okay. So in this way, basically the whole process it is to be going on here. So first of all, what is a mutual fund? Clear? So the first question basically. So it is a mechanism for pooling resources from the public, a type of security that is traded on a stock exchange, a type of bank account basically that offers high interest rates, a type of insurance policy. Clear? So what will be the correct answer? Option number A will be the correct answer. That is, what is a mutual fund? Basically, it is a mechanism for pooling resources basically from the public. So option number A will be the answer here. Next, who are the investors in a mutual fund? Shareholders, unit holders, bond holders, creditors. So this question I will give you for the practice purpose, and I request to all of you, please comment in the comment section what will be the correct answer of this question. Clear? Basically, who are the investors in a mutual fund? Question number 3. How are the profits or losses of a mutual fund shared among the investors? Equally, based on the amount of time they have held the units, based on the number of unit held, proportionate to their investments. Clear? Which we have already discussed, that is here. So the profits or losses of the fund or plan are shared by the investors in proportion to their investments. Clear? That's why I will cover line by line each point, because in the examination basically you will get question like this way. Clear? So the profits or losses of a mutual fund basically shared among the investors basically proportionate to their investments. Clear? So option number D will be the answer here. So who supervises the mutual funds in India? RBI, SEBI, IRDI, PFRDA. So what will be the correct answer? Please comment in the comment section. So 2 questions I will give you for the practice purpose. Question number 2 and question number 4. Already we have discussed regarding all these things in detail. So now next step basically which we have to do here, that is what are the management of the mutual funds. Clear? How the mutual funds are to be managed here. So a mutual fund basically is set up in the form of a trust. Clear? So how management, that is a mutual fund basically it is set up in the form of a trust which has a sponsors. Okay, so mutual fund basically it is set up in the form of the trust which has sponsors, trustees, asset management companies, and custodians. Clear? So basically it is trust, what it comprises. Clear? Trust basically what it comprises basically which has sponsors, trustees, asset management companies, and custodians. The trust it is to be established by a sponsor or more than one sponsor. Clear? So who established the trust? Basically it is to be established by a sponsor or more than one sponsor. Clear? So now next question basically, who is to be a sponsor here? So a sponsor basically it is like a promoter of the company. Clear? So sponsor basically it is like a promoter of the company. The trustees of the mutual fund hold its properties for the benefit of the unit holders. Clear? The trustees of the mutual fund basically hold its properties for the benefit of the unit holder. Clear? So who is the sponsor? Basically it is like a promoter of the company. So further, that is AMC, that is asset management company. Clear? So what is asset management company? So asset management company basically it is approved by the SEBI, manages the funds by making investment in various types of the securities. Clear? So what AMC basically will do, it is first of all you have to know that it is to be approved by the SEBI. For the second function, that is it manages the funds basically by making investments in various types of the securities. A custodian who is also registered with the SEBI hold the securities of the various schemes of the funds in its custody. Clear? So because basically trust it is comprises of AMC and custodian. So we have already discussed. Clear? First of all, AMC basically it is approved by SEBI, manages the funds. Clear? What they will do basically manages the funds by making investment in various types of the securities. So next one, who is custodian? A custodian basically it is also registered with the SEBI, holds the securities of the various schemes of the funds in its custody. Further, the trustees are vested. Clear? Basically they are powered basically. The trustees are vested basically with the general power of superintendence and direction over the AMC. Clear? So whatever what they will do, basically what they are doing, they will work in positive way or negative way. Clear? So all these powers are basically in the hands of the trustee. They monitor the performance and compliance of the mutual funds to various regulations laid down by the SEBI. Clear? So what they will do, basically they monitor the performance and compliance of the mutual funds basically to various regulations laid down by the SEBI. Further, NAV, clear, here the word comes. So SEBI regulations require that at least 2/3, very, very important, this one, it is also one of the questions. So SEBI regulation basically require that at least 2/3 of the directors of the trustee company or the board of trustee must be independent. Clear? What they will do, basically must be independent. That is, they should not be associated basically with the sponsor. At least 50% of the directors of the AMC basically must be independent. Clear? So kindly remember that in the case of the trustee company, how many directors basically to be independent? Basically 2/3. And in the case of the AMC, 50% of directors must be independent. Kindly remember both these things here. Next one, the performance of a particular scheme. Like if you are investing in, we can say that in the mutual funds or in the form, basically in the form of the SIP, that is SIP. So you are very well aware regarding the NAV. Okay. So the performance of a particular scheme of a mutual fund, it is donated by the net asset value. Clear? So how it is to be donated? Basically, it is to be represented by the net asset value. So the what is net asset value? Basically, the net asset value per unit. It is a market value of securities of a scheme. Clear? What is that? Basically, it is a market value of securities of a scheme less the expenses. Clear? What is the market value? Among that, basically, we have to subtract the expenses. Expenses incurred on the scheme divided by the total number of units of the scheme on any particular date. Clear? So what is NAV? The net asset value per unit. Basically, it is a market value of securities of a scheme less the expenses incurred. Clear? Basically, less the expenses incurred on the scheme divided by the total number of units. Clear? Divided by the total number of units of the scheme on any particular date. Clear? Total number of units, basically whatever you have held, divided by that on any particular date. NAV, basically it is required to be disclosed by the mutual funds on a regular basis. Either it is to be daily or weekly basis, depending upon the type of the scheme. Clear? So net asset value, it is required to be disclosed basically by the mutual funds on a regular basis. Either it is to be daily or weekly, depending upon the type of the scheme. Next point. So what is the structure of the mutual fund? Clear? Basically, we have discussed in brief regarding all these things. First of all, unit holder, mutual funds. They have to be asset management company, trustees or sponsors. The further that is custodian and transfer agent. Clear? We have already discussed who are to be unit holder, who are to be the asset management company, what are trustees, custodians, sponsors, all these things we have already discussed here. So when the mutual fund is going to be started here, clear? So now let's move toward a little bit backward, the history of that. So the mutual fund industry basically in India started in the year 1963. Clear? Basically when it will started in the year 1963 with the formation of UTI, that is Unit Trust of India, at the initiative of Government of India and the RBI. Clear? So the mutual fund industry basically in India started in 1963 with the formation of Unit Trust of India at the initiative of the Government of India and the RBI. So there are different phases, basically 4 phases of that. Now let's discuss one by one each phase. Phase 1. Unit Trust of India basically was established in the year 1963 by an Act of Parliament. It was set up by the RBI and functioned under the regulatory and administrative control of the RBI. The first scheme basically was the first scheme launched by UTI. What is the name of the first scheme that was to be launched by the UTI? Was Unit Scheme 1964. Clear? US 1964. This is the first scheme, and it was established in the year 1963. In the year 1978, here initially UTI basically was worked under RBI. But in the year 1978, basically UTI was delinked from the RBI and industrial IDBI took over the regulatory and administrative control of the UTI. Presently, government has privatized the IDBI. Earlier, basically, it is also one of the public sector banks. Okay, so in the year 1978, basically, UTI was dealing from the RBI, and the Industrial Development Bank of India took over the regulatory and administrative control of the UTI in place of the RBI. At the end of the year 1988, Unit Trust of India had 6,700 crores of assets under its management. Clear? How many crores? That is 6,700 crores. All these things basically will be asked in the form of the question which we will discuss in the group. Clear? So kindly remember all these things. Just go through this video at 2 times. You are able to answer all the questions. Clear? Whatever they will ask basically from these topics in the examination. Now, next one, basically, we are moving towards the phase 2. So the year 1987 marked the entry of the non-UTI public sector mutual fund set up by the PSU banks, LIC and GIC. Clear? Earlier, basically, mutual funds are to be set up only by the UTI. Now, there are entry of the other players also. So, SBI Mutual Fund was the first non-UTI mutual fund established in the year 1987, followed by the Can Bank Mutual Fund December 1987, Punjab National Mutual Fund August 1989, Indian Bank Mutual Fund November 1989, Bank of India Mutual Fund June 1990, and go on. So when LIC established its mutual fund in the June 1989. This is important. This is important. Whatever I am circle here, that is to be most important. Clear? Like first non-UTI mutual fund, that is the SBI mutual fund. And LIC basically established its first mutual fund basically in the year June 1989. While on the other side, GIC had set up its basically mutual fund in the year December 1990. At the end of the year 1993, the mutual fund industry basically had about rupees 47,000 crores. In 1988, basically it has only 6,700 crores. Now basically 47,000 crores basically of assets under their management. Now next one, that is the phase 3. With the entry, now basically earlier basically only UTI, phase 2 other public sector banks, LIC or GIC. Now private sector entities basically also enter. So with the entry of the private sector funds in the year 1993, a new era started in the Indian mutual fund industry, giving the Indian investors basically a wide choice of the funds. Also, 1993 basically was the year in which the first mutual fund regulations came into being, under which all mutual funds except UTI were to be registered and go on. In which year? 1993. The erstwhile Kothari Poiner, that is presently basically merged with the Franklin Templeton, was the first private sector mutual fund registered in the July 1993. Clear? So which first private sector mutual fund? That is basically it was registered in the year July 1993. So the 1993 SEBI regulations were substituted by a more comprehensive and revised mutual fund regulation in the year 1996, which is still in force. The number of mutual fund houses went on increasing basically with the many foreign mutual funds setting up funds in India, and also the industry has witnessed several mergers and acquisitions. Clear? There are also several mergers and acquisitions basically in the meanwhile. Now last, that is basically phase 4. So in February 2003, following the repeal of the Unit Trust of India Act 1963, UTI basically was divided or bifurcated into 2 separate entities. With the recent mergers basically taking place among different private sector funds, the mutual fund industry has entered its current phase of consolidation and growth. Clear? Just in the phase 4, you have to remember that basically UTI, repeal of the Unit Trust of India Act 1963, and UTI basically was bifurcated into 2 separate entities. Clear? So these are all the 4 phases. First one, that is establishment of the UTI. Second one, that is entering of the other public sector mutual funds set up by the PSU banks, LIC and GIC. Third one, that is entry of the private sector funds. Fourth one, that is the repeal of the Unit Trust of India Act 1963. Hope whatever basically we have discussed in this session, that is a short session. Hope all these points are clear to all of you. Clear? So in the next session, basically, we have to discuss all these funds in detail. That is classification of the mutual funds. All these things basically we will discuss in detail, and I will also discuss some of the more questions in the next session. Rest question basically will be discussed in your group. Regular session basically will be conducted, so interested students can join for all the subjects: PPB, accounts, retail, and Indian economy. Just one time fee payment till you clear the examination, but we will give you guarantee within first or second attempt. Clear, depends upon your preparation, you can clear the exam. If you regularly attend the session, definitely you are able to clear the exam in the first attempt. So thanks to all of you for joining this discussion.